Hi there, pro traders, and welcome to another Monday market review held by yours truly, Ian Giffen, on behalf of GoPro Trading Academy and, of course, the Convex Trader. So this morning we are actually live, and if you are watching this as a recording, then please do drop down in the comments below that you did watch it. I'd just like to know who has been watching our market reviews, and of course that is also going to help you secure a seat in our live trading room this week. So remember, the live trading room is open to all, particularly our members. The only thing you need to do to earn a seat there is to engage in our conversation here at the Convex Trader. So please make sure that you do that. And then, of course, the other thing is that we're going to be doing this live, but posting a recording of it later on. So please do make sure that you pop in any questions you have about what I cover here. So those of you watching live, feel free to jump into the Discord channel as well and let me know if you have any questions there. I'll keep an eye on the chat. All right, so last week we didn't have that much going on in terms of the trading opportunities for our higher time frame strategies, in particular the daily impulse and even the H4 impulse. So the general theme of the market overall, I'd say, not exclusively, but as a general theme, was a retracement week. So that's all well and good. We spent most of our time last week jumping into the lower time frames in any event. So those of you who were part of that last week, I hope you enjoyed it, and I hope that we're going to have just as successful a week this week. So in fact, I would say that it's likely that it will be even better when we have a more significant directional bias in the market. So it goes without saying that when we're in a retracement week, you wouldn't expect the trading opportunities to be quite as lucrative or even as prevalent as they are when the market's really pumping in a higher time frame trend. Nevertheless, we did fine. So please make sure that if you want to earn your seat in the trading room any week, that you continue to be engaged with us in those conversations. I know I'm belaboring the point, but if you do want to attend, and we will be doing evening sessions whenever the market is actually moving a little bit later in the evening. Often it's quietened down, but if we do have good market movement later in the day, we will also be doing evening sessions. So even if you are not able to attend during the day, please make sure that you give yourself the opportunity of at least having that seat available if we do have an evening session. All right, so that's the first thing. Let's jump into the charts then. You can see here on the weekly time frame on the euro US dollar that it's even this morning, being Monday, we're having quite a significant retracement already. Well, a continuation of that retracement, I should say, after last week's bullish candle. Let's have a look at the daily time frame. Taking its time. And there you can see that things have really taken off this morning. If you are trading the lower time frame strategies as I showed you last week, then you're probably trading this one already, because that'll definitely be a breakout on the lower time frame HTC channels. But when it comes to the daily channel, we're very much inside it. We're seeing a breakdown in this bearish cyclicity, potential breakdown. Obviously, today isn't over yet. This could retrace all the way back down and respect that resistance level. So let's wait and see what happens. But if today were to close above that high, then you guys know that means that we've got a breakdown in bearish cyclicity, which means it's the end of this bearish trend, which also means that it would be the end of the bearish wave. But we already know that it's the end of the bearish wave, seeing as this low is now being ringed on the weekly time frame. So that doesn't mean that bearish trend on the weekly time frame is over, just that we are into a technical retracement on that. And we can see that quite clearly here. All right, as I mentioned, let's have a look at the cable now, where we are also seeing a very similar picture, albeit that this, as we know, has been a much more extended bullish trend on the weekly time frame. But dropping down to daily, you can see that here certainly already last week, Tuesday, we had that higher close implying a breakdown in sequentiality of cyclicity, therefore the end of the trend. And obviously that means that we are in that bullish retracement on the weekly time frame. So we know that that's all good. So we're also seeing the dollar weakness that showed itself for latter part of last week, continuing today, which is great if you're trading the lower time frames. As I mentioned on the euro as well, these are going to be very tradable today using the lower time frame strategies. So if you are following the training on the live trading during the week, then you should know what to do there. All right, so let's get a move on. Looking now at the dollar yen weekly time frame, same thing. There's that retracement, that dollar weakness against the yen, and the end of a very strong bullish move, as we discussed last week already. And here on the daily time frame, all we're seeing is bearish cyclicity within our HTC channel, as expected. Waiting to see what happens now, whether it continues to respect the bottom of the HTC channel here. I'm quite keen to see if we do see a breakdown in this bearish cyclicity and a potential resumption. But as always, we wait for the market to prove itself. Dollar Swiss, same kind of picture, very strong retracement last week with this bearish engulfing impulse candle. And of course, this was the best pair that we traded intraday as well. We got our biggest winning trade for the week last week was here on Dollar Swiss. So on the daily time frame, clearly, as we know, we've got that strong bearish impulse wave, breakdown of bullish cyclicity. But this dollar weakness is definitely tradable again here. So it's going to be a question about whether you overexpose yourself or not. And of course, as we discussed for the funded program members, you need to be really careful about that. All right, so USD Cad, just having a quick look at the weekly first. So we discussed last week how it looked like this resistance level was going to be respected with that inverted hammer or high test candle. And of course, last week's bearish impulse candle did in fact confirm that. So still staying very much inside of the channel on the weekly time frame, and also now creating a new channel on the daily time frame with that breakdown in cyclicity. Well, I think we did discuss that already a week ago. So this has not been a pair that we've been trading at all. Moving on to Aussie. Aussie on weekly, we had that attempted breakout there. So obviously last week pulling us back inside of the HTC channel. So here we see that same retracement with the US dollar weakness. And it's a similar picture here on the daily time frame. Another one that we're staying away from for now. And remember when I'm saying staying away from these folks, I am referring specifically to these higher time frames. When it comes to trading the intraday strategies, we use different criteria, or we use the same criteria but on lower time frames. And of course, these the strong movement, even albeit a retracement on these time frames, is actually very tradable on the lower time frames. Just be careful that you don't overexpose yourself. So here we have the Kiwi on weekly, also showing that retracement, and here's bullish cyclicity already established on the daily time frame. So for the higher time frames, it really is still wait and see across the board, all of our majors and minors. Okay, so yen crosses. Here we have the euro yen, where we're seeing this continued breakdown in cyclicity. All we had last week on the weekly time frame was that inside bar. So it hasn't changed anything for us at all. And this choppy behavior on the daily time frame has really brought to an end any thought of being able to trade this on the lower time frames. We did actually consider this for the lower time frame strategy. I think it was on when was it? Where were we? Wednesday. Yeah, that bearish move on Wednesday. We came close, but it just didn't make the cut. So we left it alone. But in any case, you can see how that cyclicity has broken down. We're back inside of the channel. And although we were getting interested to see if this bearish wave would continue, it came to an abrupt halt, obviously, with that low being ringed on Friday. So that's really a picture that we see across several of the pairs, the yen crosses. Here we are still in that bearish retracement on the weekly time frame. It is a bullish inside candle last week. So we dropped down to daily to get a bit more clarity on this. And likewise, we've had a breakdown in cyclicity, nothing for us to do. Excuse me. Swiss yen, similar picture on weekly. As you can see, this is one of the reasons, as I've mentioned many times before, that I like to look at the yen crosses together, because you can see the level of correlation that we have there. So here on the daily, however, you can see we are outside of our HTC channel, coming back to the resistance level, what obviously is the bottom of the HTC channel, and we're waiting to see what happens. Friday was looking interesting with that inverted hammer high test candle. So if this does roll over, and it could, then of course that is certainly going to be tradable on the lower time frames. So keep an eye on that. Cad Yen, just a continued gentle downward slide in this bearish retracement on weekly, and of course just an inside bar inverted hammer for last week's candle. And really you can see here on daily, there's nothing to interest us here at all. So leaving that well alone. Aussie yen, likewise. Kiwi yen, just tripping through these. Nothing really to discuss. This one's even more so because it's pulled right back into the channel where we discussed that last week already. Really, there's just nothing for us to do here. Again, you see many of them we had, well, all of them really, we had this potential for a bearish continuation, which came to an end in the latter part of last week. So always important to know when to step back from a market. Okay, so moving to our euro crosses now, another one that we haven't really touched, euro GBP on weekly and daily, just really nothing for us to, nothing to interest us there, I should say. Euro Swiss, same thing. Bearish impulse candle, of course, but yeah, you can see we're inside HTCs, no valid patterns as well. Looking for any class 1 or class 2 patterns. Euro Cad, so there was this, we did get a lower low last week, but look at that candle, and we're already seeing that that low is likely to be ringed this morning, the first day of the trading week. So looks like that support level definitely being respected, just not something that I'd be interested in looking at. And you can see here on the daily time frame represented by this chop, where the bottom of our HTC channel was perfectly respected as a support level. Euro Aussie, really look at that inside bar last week. You can see what I mean, where the general theme for the week is just a retracement and even consolidation. The last of our euro crosses, same picture. Nothing to interest us. There is obviously the potential here for a reversal. This looks like a retracement in that higher time frame movement. We had this bullish impulse wave. Here we've got the retracement on weekly. So that cyclicity, this weak cyclicity, is definitely it is typical of a retracement or a phase 2. So yeah, there is potential here for this to give us a reversal and to go back in a bullish direction. So if you are a lower time frame trader, that's something that may interest you. But I think really, if you just stick to the dollar and yen pairs, it's safer. And there's plenty of opportunity as well. Right, so GBP Swiss, another one where there's just nothing to interest us at all. Last week, a lot of movement, but that really is a perfect example of quite significant chop in the market. So I'm sure you will agree with me that this HTC channel has also proved to be pretty accurate. Last week, there's the resistance level, and then on Thursday, bouncing off of that support level. GBP Cad, all right, so here we have one where today it looks like we're getting this low ring already. I didn't turn it around. Obviously, I didn't update the analysis on the weekend because this is an inside bar. It is still possible, of course, for this to roll over. But even then, it would this would still be a relevant isolated low. So I'm just going to advance this and also then just as a result recognize that we are in a retracement wave here. We'll just update all of this, and obviously it brings down our HTC channel. And we're looking for a retracement back to this resistance level, obviously, over the coming week or two. Here we can see the daily time frame where it's just been bouncing off of the support level. And through the course of last week, there was this gradual movement back up into the middle of the HTC channel. So clearly nothing to interest us at all. Remember, folks, those of you who are attending live, feel free to ask me any questions. Another one that's just an absolute nothing, 2 inside bars in a row on the weekly time frame. And on the daily, you can just see how it's consolidating in quite a narrow channel as well. So obviously of zero interest to us. All right, the last of the GBP crosses. Look at that as well. It's really just rubbish. Completely untradeable. Continue to respect the top of our HTC channel. Really staying far away from these for the meantime. All right, something a bit more interesting, but of course last week we had with that Swiss franc strength, which was quite significant, obviously, against the US dollar as well, and we were able to trade that. Here giving us this bearish impulse engulfing candle. So it ticks all of those boxes, and that's why I updated the analysis on it. And if you drop down to the daily time frame, you can see how our bullish cyclicity is completely over. And in fact, this is an aggressive reversal. We do have the 3 R's, that is true, and we always respect that. But it is also true that when we have a phase one like this, it is more likely that the third of the 3 R's, which is reversal, is the one that's going to apply. But we wait and see and let the market prove itself. Right, looking at the last of our crosses, here's Aussie Swiss for last week, a single bearish candle, really just near the top of our HTC channel. There's no real directional momentum here at all. And that's what the daily looks like, continuing to respect through the course of last week at the bottom of the HTC channel. And Aussie Cad here on the weekly time frame, respecting the bottom of the HTC channel, just bouncing off of that. So another one to leave alone there. And you can see that the cyclicity here on the daily time frame reflecting that. So breakdown in that bearish cyclicity, again, nothing for us to do here. So as I've commented right at the beginning of this market review, the theme for the week has last week has definitely been retracement and consolidation. Right, so it looks like this high is now in fact being ringed with today's lower low for the first time. I'm not going to advance it yet. I'm really not interested in that. You know, that's 2 flat weeks in a row, and there's just this narrow consolidation here near the top of our HTC channel. So moving on to the last of our 2 currency pairs. Here's Kiwi Swiss, last week's candle, also complete nothing. And here's the cyclicity on daily, giving us a potential, obviously, for trading it last week with that breakout at the end of Wednesday, and it gave us a bit extra on Thursday. So for those of you folks who are channel traders, and don't mind the fact that B was poking its nose out of the HTC channel, and that's one of the things that you could include as a filter. Certainly I do when it comes to the lower time frame stuff. Then you would potentially have looked to take an H4 impulse on the lower time frame. We didn't take anything there, and it's just a bit of a messy setup at best here. So we didn't trade this. Let's see what happens, but it looks like following Friday's close inside the HTC channel and showing that significant bearish weakness, we're not going to get anything further there. So Kiwi Swiss on weekly time frame also, and today even confirming the fact that we are in a retracement here on the weekly trend, bearish trend, which looks like this on daily. That bearish trend on the daily time frame having come to an end with a breakdown in cyclicity, and now we are into quite a strong move over here with Kiwi strength and Canadian dollar weakness, which we can't use on our higher time frame strategies, but is certainly something that you may want to consider on the lower time frame, except that I really think you've got plenty to work with on the majors, minors, and yen crosses. All right, so let's move on to have a quick look at gold, where last week we just had a bit of a retracement candle. It's continuing this week, and of course that is also a reflection of the US dollar weakness. Looking at this quickly on daily, you'll see that reversal. We spoke last week about the fact that we were into a bearish trend here with the on the daily time frame with gold, and we actually did take some trades the week before. We discussed that, but it really came to a very quick end right at the beginning of last week. So that precluded us from doing anything more there. So there you can see this retracement behavior all the way through. Right, so the exception obviously being our the indices. So if you're trading the indices at all, here's the Dow with another very strong bearish candle. It failed to be an impulse candle as much because of the length of the tail from the preceding week. But as you can see here, we're still looking pretty bearish overall. I suppose this needs to be updated somewhat. Let's see, technically speaking, if we get a ring low here, then this bearish trend on daily is over. So we might see a bit of a recovery in the near term. But also, this is another one where we're waiting to see what happens during the course of the week. But as you know, I prefer looking at the more volatile indices. First of all, the S&P, similar picture, but further outside of the HTC channel. But even here on the daily time frame, as I say, it is very much a similar picture, which we're not surprised with at all, as these instruments are quite highly correlated. And here is the Nasdaq. So what makes this one a little bit more interesting, of course, is that we had a lower low being formed over there. So in reality, this is still technically, we could consider this still to be in a bearish wave of this trend because it made a lower low. So we have not had an isolated low as yet. Let's just have a look at the daily. But this is really where, where we make our decision, is what is happening on the cyclicity here. It hasn't yet formed, this low hasn't yet been ringed, obviously Friday's low. There is the potential for a bearish continuation here, a very strong potential, in fact. So if I'm on the indices, this is the one where I'm looking at this one the most. Okay, so that's the indices. Oil, you can see it's still on the daily time frame, it's flat. Weekly time frame flat, obviously. Nothing going on here, hovering around that 105 to 110 level. Hasn't been traded for a while. Bitcoin, bit of a bearish week last week. Nothing really much happening here on the weekly time frame. And having said that, though, if we just look at the daily time frame last week, it really just went sideways the whole week. So there was a bit of a gap at the start of the week, but this is it's completely neutral. I'm looking for another buying opportunity when it comes to actual Bitcoin. This is not it. So I'm still biding my time. There's no rush for us to see what potential there is in the market. All right, folks, so that's it. Any questions from you guys who are watching live? Everyone happy with that? And while I wait for that, if you are watching the recording as well, do please pop your comments and questions into the comments below. And if you are doing it on the Facebook page, the Convex Trader, obviously that will be setting you up to make sure that you get your invitation to a free seat in our live Discord trading room starting tomorrow morning. If you, again, want to be part of that, you need to be taking part in the conversations in our community on the Convex Traders Facebook page. So please do make sure that you are active there. And as time goes by, obviously today, let me just point out firstly that today is the last day to earn that free seat for this week. But then everything you do through the course of this week in the page will also be helping you to earn your seat for next week. So there's continued encouragement to take part in our conversations. Right, folks, doesn't look like you have any questions for me. So if you're watching this also on the YouTube channel, please make sure that you subscribe. If you haven't yet joined us on the Convex Trader Facebook page, then please do. You are welcome, and we do provide lots of useful resources to help you on your journey to trading success. Right, folks, so I'm looking forward to a great week's trading. I'm sure you are as well. For those of you who are going to be in the live room, I will see you all tomorrow. Chat to you all soon. Bye for now.